When constructing a portfolio, what's your general rule for percentages in core funds like VUG or VGT? And why did you choose this over a broad-based fund like VOO or VTI?
Hey, thanks for that question. It's a good one. Okay, so what's the ideal positioning in a fund like that? If you're just getting started investing, probably 100% of your portfolio should go into an ETF like that, especially if you have like, let's say less than 10,000 US dollars or some equivalent to that. If you're just getting started and you don't have enough money to diversify properly across, let's call it a dozen stocks, like a dozen core starter positions, like your big large cap bread and butter stocks, 100% of your portfolio should probably be going into some sort of broad-based ETF. Why did we pick those two core funds that we did? There's a long story behind that. When I got started investing, I remember looking at these charts, like 20, 30-year stock charts of like the telecom companies in particular. I remember like Verizon and AT&T, and T, and I remember looking at this chart, multi-decade chart, thinking, man, what if you had invested in like a company like that back in the day? You'd have done really, really well. And I remember having a conversation at the time when I was just starting out in the industry, having this conversation about back in the day, this is probably something that we would have considered technology. You buy it early on when it's kind of trendy and cool, and then you just sit on it, you ride out the ups and downs, and then eventually it matures and it's no longer considered technology anymore. But you look back over a couple decades and you've made a lot of money. And so I remember thinking, well, I want to own whatever that is today. And Vanguard Growth has a bunch of large cap companies that will do, they're still growing, but will do very well. But I also wanted us to have a lot of the up and comers that are not so big, but could be someday. And so that's how we landed on VGT. That's the short story.